Today on the show, I have the pleasure of speaking with Eric Satz, founder and CEO of AltoIRA. Eric is a serial entrepreneur who has seen both his fair share of wins and losses over his career. He knows investing is no longer just for the wealthy, and he's living out his mission of delivering 21st century investment opportunities to everyone, including non-accredited investors. Eric is a former investment banker and an early stage investor with a passion for nurturing startups and raising capital. Through AltoIRA, Eric is making alternative asset investing available to all by giving people the right support they need to choose and make their own investment decisions using their IRA savings. I'm really pumped and excited to have him on the show today to share his incredible insight and knowledge about the IRA industry. But enough out of me. Let's get him out here. G'day, Eric. Welcome to the show. How are you doing today, mate?
Reed, thanks for having me. Really excited to be here.
Mate, my pleasure. A little bit off in the green room, we're talking about what you do, but let's rewind the clock and tell the listeners how you made your first ever dollar as a kid.
Well, so I grew up in Miami, Florida, and my first business was really quite simple. I sold frozen lemonade out of an unair-conditioned van, and I would drive around Miami. And this was like the most stupid, simple, straightforward business model, right? The more you sold, the more you made. And I liked maximizing my earnings, and so I would constantly play with the route that I would drive in order to do just that. And so I'd go to construction sites, and I'd go to warehouse areas where you couldn't find food anywhere, and I would just sell the hell out of frozen lemonade as best I could.
And being in a hot truck, did it just turn into lemonade by the end of it?
So by the end of the day, it got a lot easier to scoop, for sure. But I think I may have been more of a mush by the end of the day in that van than the frozen lemonade.
Got it, mate. Well, now connect the dots. What got you into entrepreneurship? What did you study at university, and how did you embark on this ambition to go down this path of becoming an entrepreneur?
So it's interesting that you asked that question, because I really like that model of the harder you work, the more you make. And so when I went to college, and I went to school in the Northeast at a small school called Amherst College, and I acquired the distribution rights to the Boston Globe and the New York Times on campus. Okay. And so I sold those newspapers to my classmates. And from there, I actually went to Wall Street, right? So I went to investment banking. I became an investment banker with a firm called DLJ, which was short for Donaldson, Lufkin, and Jenrette, still the greatest investment banking firm ever. And, I actually left DLJ to start a coffee bar in New York City. Okay. And that was actually the first time that I just flat out failed, right? And I still remember sort of writing the letter, because we didn't have email yet, right? So writing the letter to my investors to say, thank you for believing in me. You're not getting any money back.
Wow.
Right? And that is the worst feeling.
But why not? Why do you want to leave DLJ and start a coffee business? What was that mindset?
Yeah, so great question. You're not you can get in line behind my family in asking me that in asking me that question. But it really wasn't a choice, right? It was just I had to do it, and the way it actually unfolded was that these guys had moved to New York City from Seattle, where obviously Starbucks had begun to blow up, and in a good way. And by the way, DLJ took Starbucks public. And so I had exposure to the coffee business from a finance perspective. But on top of that, these guys had moved from Seattle to New York City, and they opened this little coffee bar right downstairs from our office. And I would run downstairs probably 2 or 3 times a day to get some, high-class coffee, as it were. And I started talking to these guys. And before you knew it, I had the bug, and I flew out to Seattle. And what a lot of people don't know is that when Starbucks became Starbucks, when Howard Schultz bought Starbucks, he bought it from the guys who actually then would start Peach Coffee after that. But when he bought it, they split the company into two, into a wholesale company called Caravali Coffee, and then into the retail business, which was Starbucks, and they had a non-compete for some period of time. So in any event, I made my way out to Seattle. I met these Caravali guys, and they took me out for this big steak dinner and fed me lots of red wine and said, hey, you should sell Caravali coffee in New York, and you should start a company, and you should be the retail guy. And the fact of the matter was, all I needed was a tiny push over the edge. and they sort of pushed me with that red wine. And, and red wine and coffee go together, right?
Yep.
So
Exactly
I went back to New York, I quit DLJ, and I opened a coffee bar.
That's awesome. Clearly there was something you didn't want to work for the man. There was something in you to just push the envelope and screw it. I'm not going to work for this Wall Street company and go out and give life a go. I think because the risk, the uncertainty of doing something like that, it takes a lot of balls.
Yeah. Or naivete.
Yeah. Right.
Either way, but yes, I agree with you. You do your own thing. So, you get it entirely. And there's nothing wrong with, being an investment banker or being in finance. It's just not what I, was drawn to. Right. It was just this, I had to go do this other thing. And then, the truth is that when I failed, I ran back to Wall Street for cover and to bail myself out of these debts that I had accrued. And, that's actually what led me to my next set of ventures. So I after having restructured my own life and realizing I was actually pretty good at that, that led me to a job with UBS, Union Bank of Switzerland, and their restructuring and advisory group and doing a lot of distressed debt investing. And from there, my wife actually had an opportunity to buy an art gallery out in San Francisco. And so we moved to San Francisco, and I went back to work for DLJ. And I was one of 4 people to help start the internet investment banking effort for DLJ on April Fool's Day, 1998. Kind of hard to forget. And while part of DLJ, I helped co-found a company called Currenex, which was the first online foreign currency exchange trading business platform, if you will. And I did that with a couple of my clients, actually. And that business was eventually purchased by State Street for a whole bunch of money. And so that was a really good outcome or exit, as sort of people in the business like to say. And but from there, after leaving investment banking for a second time and moving to Nashville, where I am now, my wife and I co-founded an online organic home grocery delivery business called Plum Good Food, which we built to about $5 million in sales by the end of 2008, at which point the economy just fell out of bed, right? And so we ended up shutting down Plum Good, and then sort of focused on what would be next. And I ended up starting this venture capital fund, which was where the state of Tennessee was our sole limited partner, and we were really focused on investing in Tennessee-based entrepreneurs and businesses. And as part of that process, one day I was looking at my IRA account, and sort of the light bulb went off. I had this moment where, holy smokes, that, you know, from a duration matching illiquidity perspective, these are the exact dollars that I should be using for alternative asset investing, because you can't touch that stuff for a long time anyway. And so I went about trying to figure out how to invest my retirement savings into alternative assets. And that's ultimately what led me to AltoIRA.
Interesting. Wow. Well, mate, you've got such an incredible checkered past, from coffee bars to going back to Wall Street, to going to San Francisco, to galleries, to foreign exchange, online trading, to plum good food, which sounds awesome, which I want to hear a little bit more about, to VC funds, to finally landing on AltoIRA, which is, so the real serial entrepreneur, the word serial comes to mind, you know, first and foremost. And I remember having someone on the show who jokingly said, no one actually really wants to be a serial entrepreneur. If they just get one business right, they don't need to be a serial entrepreneur. So I think the thing is, what I can hear from you is that you have a resilience to keep going, which is awesome. So
never a dull moment. You know, I think my wife is the resilient one, not me. But you know, I don't think that's true, by the way. You get one right, you don't have to be a serial entrepreneur. I think entrepreneurs can't help themselves.
Right.
And
no, I agree.
you know, I know so many people with successful businesses, and they're still involved with other businesses. Right.
The bug never stops. You keep wanting to build something from nothing. Right. And
that's right.
Yep.
That's right.
And I'm sure when I see you in 10 years' time, Alta's off doing its own thing, and you're doing something new again, right?
Hey, I hope so.
Yeah. So tell me a little bit about your mission about trying to provide 21st century investment opportunities to everyone. What does that mean in your eyes?
Yeah, so I'm going to go back a step and say I don't think it comes as a surprise to any of your listeners that most of America is facing a retirement crisis today. And, you know, the way investment activity has been shaped, by which I mean, most of us really have become passive investors in mutual funds, ETFs, index funds, and because of a shrinking public market landscape, the returns that would otherwise enable us to retire over a lifetime investing just aren't there anymore. So in reality, we're looking at 2 to 4%, and you know, I think historically most people would talk about 6 to 8%. Right. Well, that's a really big delta. Mm-hmm, mm-hmm. And so, in this world where you know, I think at its height in the mid 90s, we probably had about 8,000 public companies. Today, we've got less than 4,500 public companies, and the market cap, the total public company market cap is highly concentrated, probably in just 5% of those companies, which means that every mutual fund, ETF, index fund, et cetera, is going to be comprised of some version of those top 200 companies. And what's happening is that companies are just staying private a lot longer than they used to. So, you know, I think by way of example, Amazon went public probably 2 or 3 years after being founded. And today, as a public company, represents probably 550 to 600 times its IPO price.
Right. Google
went public, I think, maybe 6 years after being founded. And today, I want to say represents, I don't know, maybe 50 to 60 times its IPO price. Facebook went public 8 years after being founded, I believe, and today represents only 2 to 3 times its IPO price. So the returns that once existed for the public market investor are no longer available. Right. And so if you don't get access to private investment opportunities, you're never going to get the true diversified portfolio and potential for outsized returns that's going to allow us to retire. And so that's really what drives me. It's what drives the AltoIRA team. We're mission driven. We want to make sure that people are in a position to retire if that's what they want to do.
And I think it's a really great example of what you just said before. The 8,000 public companies in the mid-90s now down to, what you said, 4,500. I think that's a huge example of what people are holding on to their capital, remaining private because of what, in your opinion, because they have more control when you're private. Is that right?
Well, there are a couple of things driving that. One, there's a tremendous amount of private capital available, right? So from endowments and pension funds, and that's another interesting thing, right? If you look at, and I think endowments on average allocate 52% of their funds to alternatives. Pensions allocate, I think, 28% of their funds to alternatives. The average individual has less than 5% in alternatives, probably closer to 1%. Go ahead.
No. I was just going to say the alternative in your mind. What do you think of? What do you class as alternative in what you do at Alto?
So it's early stage venture, it's later stage venture, it's traditional private equity, it's credit opportunities, it's marketplace loans, it's real estate, it's crypto. Right? It's non-registered, non-publicly traded securities, and so the pre-IPO market is gone, right? It's a thing of the past, and I'm just looking here. Actually, this is interesting. So Google actually went public 6 years after being founded, and is only 20 times its IPO price. And Facebook, 8 years after being founded, today is roughly 3 times its IPO price. So I wasn't far off. But other hurdles, besides the fact that companies don't have to go public because there's all this private capital available institutionally, the regulatory burdens that they now face really sort of discourage that liquidity event, right?
Right.
And so we need to find a way to get Americans access to these alternative investment opportunities. And 90% of America's savings live in retirement accounts. It's pretty soon it's going to be $30 trillion. That's a big number.
Got it. And so what are you mostly seeing with your clients investing in today's landscape, given the 2008 crash? And I guess, when did Alto I should say come into inception?
Yeah, so we started in 2016. We raised our first money in 2016, and then we launched in April, May 2018. And it's kind of interesting the way we launched, and I'll tie it back to what just happened earlier this month. We launched by integrating with a company called AngelList, and AngelList allows accredited investors to invest in primarily early stage companies.
Mm-hmm.
And by integrating with AngelList, we wanted to show that the dogs would eat the dog food, or the chefs would eat their own cooking, whatever analogy you want to use. By which I mean, we said, hey, guess what? You can now use your retirement savings to invest on AngelList. And the first deal that you can do that with is the AltoIRA deal. And so we ended up raising $250,000, probably 25 to 30% of that capital came from people who created IRA accounts with Alto and invested in Alto. And so that was like from a standing start, from nowhere, from zero, sort of proof that there was demand for this capability. I'll fast forward to earlier this month, where we set out to raise $2.5 million. We ended up taking in $3.5 million, 2.5 of which came from AngelList. That's it. So 10x what we did just 18 months ago. We did on AngelList $2.5 million, and we had 200 plus participants in that funding syndicate.
Got it.
And boy, that was funny. And so we now fast forward again. So in addition to AngelList, we now have 16 plus sort of investment platform partners that we work with. Our investors invest in early stage companies. They invest in credit opportunities. They invest in real estate. They invest in real estate. It's both commercial and residential opportunities. They invest in crypto. So we have an integration with Coinbase so that you can invest in crypto assets. And one of the huge advantages there is the fact that by investing out of your IRA, you don't have to worry about the ever-changing tax landscape that is associated with crypto assets today, because IRA investments are tax deferred, tax advantaged until the time of distribution. But the other thing that I think is really interesting for the individual investor, and the big change, which is also being supported by the SEC and our financial markets in general, is what I call the fractionalization of securitization. You no longer have to be able to buy the whole building. Now you can just buy a small interest in the building along with everybody else.
Right.
And so now you no longer have the headache of being the landlord and CapEx and maintenance and all that stuff, but you still get exposure to an asset class you otherwise can never get exposure to.
Which you're really meaning crowdfunding for real estate in your example, right?
Exactly.
Right.
Correct.
Right. So talk to me about the business model of IRAs and how they work, because I've had a lot of IRAs on the show talking about what they do, but how does the business work? How do you talk about creating your businesses and being a serial entrepreneur, but you obviously get fees from your clients. So is it just a fee-based business? Is that all it is? Is it, or just purely a service-based business and you charge fees on it, right?
Yeah, so it's actually a couple things. So there is a fee per transaction. And by the way, everybody, not that this is meant to be a commercial, but I think if you go to altoira.com/pricing, we don't hide our fees. We're very upfront, transparent, and hopefully easy to understand. That's our goal. So excuse me. There's a transaction fee every time you make an investment. But for example, because we're trying to encourage diversification, portfolio diversification, if you are making an investment of less than $5,000, it's actually free. There's no charge. Okay. So we want to help the people who are beginning to save and learning how to invest. We want to help them do that. And the best way we can do that is by not charging them a fee when they're making investments of a smaller size on a smaller scale today. The second way,
yeah, go ahead.
The second way we make money is we essentially get a monthly fee based on your total account size, right? So we take care of all of the IRS reporting requirements for you at the end of the year, and for that we charge a fee. So that's there. What's also coming, I think, I actually know, but I'm sharing with you, is that we're in the process of getting our broker-dealer license,
okay,
which will allow us to open up our own marketplace, where our goal is to essentially become, you can think of it as the kayak of alternative assets, right? So you're going to come to Alto for deal discovery. So you'll say, I'm interested in this type of deal, and on the Alto website, and we'll show you the deals that are appropriate for you.
How is that? I know that my layman understanding of IRA is that they can't give a investment thesis on if, hey, Alto, I want you, Eric, can you look at this real estate investment opportunity Reed's given me? you can't opine on what to do with the money that you happen to have at Alto. So how does having a broker-dealer license help you? Surely that is a conflict of interest?
So not exactly. So we're not going to be advisor.
Okay.
What it does allow us to do is be an introductory broker.
Got it.
Or an introductory party, which means that through the securities entity that we will be creating, we will be able to act in a way that we can't as your custodian. And so there's actually a Chinese wall, and the two companies are entirely separate, but it gives us the flexibility to act in a way that we think will be more beneficial to our customer base.
Oh, 100%. I know so many IRA companies that want to introduce people to one another, but they can't because of the, the custodial reasons. So, but tell me the difference between what you classify as an alternative IRA and a regular IRA.
Sure. So, and we refer to it as alternative instead of self-directed, because you can have an account at Schwab or Fidelity or TD or Vanguard and self-direct. The difference there is that you can self-direct into the companies and or securities that their investment committee has said is appropriate for you, right? Whereas with your alternative IRA, not only are you self-directing, you're self-directing into whatever it is that you really are interested in and maybe know a lot about and want to invest in. We don't provide, as you mentioned earlier, we don't tell you whether it's a good investment or a bad investment. We just help you make it.
Right. And I think the big thing from an operator point of view, because we get a lot of investors coming through our platform to invest in our real estate deals, is the lack of, there seems to be so many IRA companies out there, and we deal with a lot of them on our back end with our investors. The lack of direct communication to the investor to say, hey, if you're interested in investing in this private placement, you need to fill out the forms like this. And I think as an operator, it's so goddamn frustrating when you're getting this investor saying, how do I fill this out? It's like, I don't know, ask your IRA company. And I don't know what it is, but it seems to be industry wide that there's just a real scratch of the head when it comes to compliance and filling out forms and all that sort of stuff. And then they look at us, the operator, and say, well, how the hell do I do this? Like, I don't know, you ask your IRA.
So Reed, thank you very much for the softball. So this is why I created Alto. So we actually, we have the first platform that is two-sided. So not only do we have relationships with investors, we also have relationships with the issuers, of which you would be one.
Correct.
And so our transactional hub and platform actually removes the heavy lifting and the burden from the investor's shoulders and from your shoulders, and actually serves as the communication and execution piece that ought to be present in any sort of transaction closing process, right? And so the theory was, and this honestly, this comes simply from my years of experience as an investment banker and as a venture capitalist, to understand that, we shouldn't be asking the investor to do the heavy lifting here. Like it was only in this self-directed IRA industry where the investor was asked to do all the work. It's like, going around the barn backwards. And so what the first thing we did was we digitized the entire workflow process. And we pieced out the parts that are relevant to each party in the transaction. So now when you're the investor on an Alto IRA platform and doing a deal on our platform, we ask you for information that you're going to know. Your name, your date of birth, your social security number, your address. We ask you, the issuer, in this case, your firm, for the information that you have, which would be the offering documents relating to whatever real estate investment is up next. And so you're able to upload those documents to the Alto IRA platform, and you're then able to issue an invite to all of your investors who want to use their retirement savings to invest in your deal. Everything else happens digitally, electronic signatures. We automate the workflow and the communication process, and we make it stupid simple. This way, your investors don't have to call you and say, Reed, why, I filled out the PDF and I scanned it and I sent it back to the trust company and they said I did it wrong. And also they're asking me for the EIN. What's the EIN, right? Like the investor shouldn't have to know this stuff, right?
Right.
The investor should just know where to send their money and what documents to review and make sure that they're making an investment that they want to be making.
Well, it's interesting. Yeah, you bring up so many plethora and I'm talking from an operator's point of view, right? Like, and I've got to give this side of the story because all the listeners out there who do have IRAs, there's different experiences. Like it's literally like going to the grocery store and you could pick up 7 different types of milk. Like they all give you milk at the end of the day, but it's what you actually like and taste and want to consume. But from my point of view, I love that you've got that platform, but we also have a platform, right? Where we have people log in on our secure portal and do all the things online through our HelloSign. And so when the issue is that when we have you and 6 other IRAs going, oh, can you please upload all your documents to our portal to then get it back onto your portal to then be like, there just doesn't seem to be that catcher or keeper to like make that intertwine easy. And it usually is the investor who's stuck in the middle to try and be the communicator between the two of us, meaning the IRA company and us as the issuer. And so it's just I give that analogy and that sort of green light to show how we also have a struggle with, because we're trying to automate everything on our side as well and offer best-in-class services to our investors, but they're coming with different IRAs and trusts and blah, blah, blah. And you're like, okay, so how do we market it, or how do we make sure everyone's got the same experience? And it's very hard when individual IRA companies have their own experience, right? Because they want to have their own customers to be satisfied at the same time.
So that's interesting. And the listeners don't know that we've never met before. So they're going to watch us make the sausage right now, or actually listen to us make the sausage. So do you do all of your own administration, or do you have a fund administrator in the background, and who is it?
Oh, no, we do. We have a fund administrator who's our executive assistant. She helps with any sort of issues. The majority of our issues with onboarding investors are through IRAs. And the reason is we've set it up where it's like, okay, you can assign a secondary IRA, because usually the IRA wants to see, or the custodian wants to be a signer, but some don't. And this is where the communication falls out. It's like, well, do I need to assign this person to sign this document? And do I sign it first, or he signs it first? And like, well, hey, has the issuer signed it yet? So there's just different standard operating procedures for different IRAs, and that's the issue.
Right. And so what we've done when we created the platform is we said, what's actually required? Not what's a nice to have, or, hey, we want to see this thing. Our approach has been what's actually required, and nothing else. And so what I'd love to do when we're done recording is put your administrator in touch with the appropriate person on our side, because we're happy to integrate the process for you so that it's entirely seamless. We agree with you 100%. It should not be the way it's been in the past. That's why we exist today.
Yeah, no, and I agree. And the role we don't take, like you can't take with advising clients on where to invest, it's also a little bit, and where, advising clients on which IRA company to use is it's the same thing. They don't look at my lunch, I don't look at yours, so to speak. And so I don't need to say, well, hey, we really like this company called Alto, you should definitely go use it. In the future, maybe that is a way forward, but it's sort of part of the business that we don't have to want to force stuff down the throats of investors. We want it to, if they've chosen a company, great, but hopefully it's seamless, which 9 times out of 10 is not.
No, and I totally agree with you. I don't think there's anything wrong though with saying not only is this best in class service, but it's also the most cost effective. And by the way, it's easiest to execute. But you can use whoever you want. We'll go through the pain of taking your money, however you want to, how much ever pain you want us to go through, or we can make it easy on you. Yep. And by the way, if you're on Alto, you also have access to all these other investment platforms to truly diversify your retirement portfolio.
Love it. Love it. Mate, what has 2020 got in store for you and Alto this year?
So a couple of big things, the biggest of which is the broker-dealer license, because the other thing that allows us to do is really serve our customers in a way that they're asking for, by which I mean, something like 70% of our customers are transferring cash from Schwab, Fidelity, TD. And what they really want to do, they've told us, is just move their whole account over. But right now, we don't hold public securities. And we never want to be in competition with anybody over public securities. That's not our goal. That's not what we're about. But we are in the customer convenience business.
Right.
And so if our customer is saying, hey, I just want to move my whole portfolio over and then liquidate and invest in alternatives as I see fit when I'm ready, then that's what we're going to enable them to do. So the broker-dealer license will give us that ability for essentially one click, move your portfolio over to AltoIRA and make it easy to manage all in one place. And I would say that's probably the most significant thing that we're doing in 2020.
Awesome, man. Well, I'm really excited to see the growth of Alto, and I think it's been such an incredible journey to this point, right? So wish you all the best of luck, mate. At the end of every show, we like to get into the top 5 investing tips. You ready to do it?
I think so.
Mate, what is the number one habit you practice on a daily basis to keep on track towards your goals?
So if you don't write it down, it's not real. And so I think you got to write it down in order to hold yourself accountable.
100%. What do you use? Just a pen and paper? Pretty standard.
I have lots of scraps of paper all over my desk. Yeah, but also more recently, I actually to hold the company accountable. I have a blog, which when so motivated, I will write about, and I think it's called Gut Check is the name of the blog, and I recently wrote something on there just to hold us publicly accountable to our customers and our investors.
Got it. No, I think it's really important. I'm writing down everything in a book that I have. I've got many copies of this book and many versions of this book, and I go back and look at. But if I don't do it, it's it gets a clutter out of your mind onto a piece of paper. I think that's really super important. Who is the most influential person in your career?
My wife. That's easy.
Really?
Yeah. I mean, so if you're, this is for people who are, let's just say, not single. Right. If your partner's not on board with the life choices you make, it just doesn't work.
Right.
Right.
100%.
And so that's an easy one.
Someone said to me one day, the good litmus test for a good partner is when your chips are down, meaning me or you, that they can shield you from the world. And I thought that was a really good, love and attraction and all that sort of good stuff come into it. But when your chips are down, can they shield you from the world for a little bit to be your protector? And I think I just thought, wow, that's a good, deep, but a good way of looking at it. So awesome stuff.
I agree.
What is your number one tool in your business? When I say tool, it could be a physical tool like a phone or a pen and paper or an app like software.
Yeah, so it's actually customer feedback. And look, the only way you get better is by having people be honest with you.
Yep.
And my grandfather said to me, actually, when I failed with the coffee bar, the first time that I'd really failed at anything, he said, yeah, this is the best lesson for you to learn and to learn it now, because when you do things right, you think you're actually really good at stuff and you think you can just do other things and those things will be right too. But by doing things by doing things in which you fail, it requires that you think about what's next in a completely different light and a completely different way. And by having customers who, most I think would characterize them as early adopters, and a lot of businesses have them. But letting them know to be vocal and to be critical of the product or service you're building or providing, that's the way you get better, right? To understand where the gaps are, where the holes are, and just how you can continually raise the bar. And that we don't want to just be a little bit better. We want to reinvent the whole fucking thing. Sorry.
That's right. Swear all you want. No, but I think it's really important, that lesson, because so many entrepreneurs, when they start and they grow, they think it's their way or the highway, and they become this bottleneck in their business, and they can't take on, they don't have the humility because they've put all this work and effort and love into this business. They don't have the humility to take on criticism. And some people can't do that, and they don't want to hear it. But sometimes that's the best form of medicine, is to hear some criticism or some honest feedback about how you're doing. And failures are those honest feedback that maybe not a customer, but life is giving you, right? And saying, this is feedback you stuffed up, and you need to recalibrate. You need to reset here for a second. So I think that's really,
that's interesting because, by the way, it took me a long time in this podcast to say fuck. It's like my favorite word of all time, and I can't believe
I'm Australian. We swear like sailors, so it's all right.
Yeah, I can't believe it took me that long. But anyway, we're there now. So, but I learned a while ago, and I really learned this actually with the online grocery business, which is that the best way to, and by the way, I don't mean for anyone to do this intentionally, because then I actually don't think it'll work out. But the best way to earn a customer for life is to fuck something up and then fix it, and to fix it in the way that it should have been the first place, and even better, to just go beyond expectations, and I think that's how you win customers. That's what that's when your customers start to talk about you and tell others about you, because they can't help themselves, because, oh my God, you won't believe they screwed this up, which was, I can't believe they did that. But then they fixed it. And not only did they fix it, they like far exceeded my expectations. And that's how you win a customer for life.
100%. And you get raving fans, right? That's how you build raving fans. So
totally agree.
Eric, last question, mate. Where can people reach you to continue the conversation? They want to find out a little bit more about Alto and really what you do and get inside your space.
Sure. So AltoIRA.com is a great place to start. The frequently asked questions section, the what we do, who we are, our investment platform partners, those are all there. And then if anyone just wants to ask me a question directly, Eric Satz, ERICSATZ @AltoIRA.com. And I try to answer all my emails. Don't always succeed, but I try.
You try. Well, mate, I want to thank you so much for taking some time out of your day to jump on this show. I want to just sort of reflect some of the things that I took away from you. I think the insight into the public trading companies and the shrinking of accessibility to good returns in the public markets is I think it was quite eye-opening for me, and get some stats in and around when companies go public and the lack of profitability they make because they're waiting longer and longer. So they're multiple when, in 5, 10, 16 years time, when they're on the markets for that long, their multiple isn't as great. Thus, the public markets can't benefit. And I think that the whole analogy of 8,000 public companies in mid-90s to the 4,500 today is a shrinking pool and a shrinking net. But also, just what you talk about then, the go beyond expectations with what you do and become, have raving fans when you do fuck up. But I think the biggest thing that I've taken away from today's show is that you do have resilience, mate, and you do have a way to look at it and stumble, get back on the horse and keep going, because you could have given up a long time ago and be in some W-2 job, but I think the entrepreneur in you was always strong. So yeah. But did I leave anything out?
No, Reed, I very much appreciate that. I don't think you could pay me a higher compliment than the one with resiliency. I really appreciate it.
My pleasure, mate. Well, look, enjoy the rest of your week. We will talk very, very soon, and we'll catch up then.
That sounds great. Thank you so much.
Well, there you have another cracking episode jam-packed with some incredible advice from Eric about what he does and his journey in and around creating just life, creating different businesses, stumbling, getting back up, getting back on the horse, and creating what is now ultimately AltoIRA. Some huge lessons in that podcast. Please rewind it and listen to it again. If you do have any questions for Eric, remember to either Google or go to altoira.com and check out what they do. I think they're changing the world in which we just use self-directed IRAs for the positive. But I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show. And we'll do it all again next week. So be bold, be brave, and remember, go give life a crack.